Hey guys, this is JR for the Market Surveillance Alliance. And what if the Federal Reserve were to just do what they have to do, don't put everyone out of a job, don't push a recession, kind of slow down with the demand destruction? What if? I'm just saying, what if that happens? Then obviously everything's just going to jump and you want to be part of that. So I'm going to share with you my two top sectors. Two top sectors. I think you're going to be surprised, but if you pay attention closely, you will see why that is and how you can play that with the power of options. As you should remember, the Market Surveillance Alliance is where we track what the high rollers are doing in Wall Street, trying to understand what's happening out there when they place their bets during lunch, when they do the last minute, very close to the closing bell. We want to understand what they're doing so we can allocate and take risk as they do, okay? Don't fight them, just join them, okay? So let's go to the charts, and the first one that I want to talk to you about is XBI. This is the SPDR Sears Strauss Biotech. Right now, you don't need to be a genius to understand why that is, but just talking about technicals and perspective about taking risk, one thing you will notice is that at some point we had KWEB, which is the internet ETF in China. It bottomed before US stocks. Now, if we think the bottom, and it's not about calling anything, it's not about having a bias, it's just trading the chart in front of you and the circumstances. That's all it is. If we were to lose the levels, hey, you know what? It's time to buy puts. It's pretty simple. So what's happening? I'm on the weekly chart just to show you how much you have to the upside so you can sort of pick the opportunity. In this case, we're right now trading at $81. FOMC will be in the next minutes, hours. And if there's a continuation in the risk, we're looking for 100 XBI. Now, different ways you can trade this. One that I coach our traders, new members in the Market Surveillance Alliance. It's something we do over there, but for you, it will be basically to bet in the next couple months, probably all the way to October, and we can have a sense of what's happening. For example, bottom was here 1, 2, 3, 4. That's a month, about 2 months. So you can probably go to Quote Media, just share a view on potentially ideas, setups, and remember, it has to be based on the fact that the Federal Reserve, the wording is more, it's probably less aggressive, okay? It's less aggressive. And everyone feels like there's a relief rally rather than experiencing a dead cat bounce. So that's what you're looking at. So I'm going to option chain. It's about 2 months. So probably be targeting September, not August. September 16, that's the monthly expiration. And there's a couple ideas you can take from there. You can always use OI, the 90. It's attracted 9,000 contracts. And the 95, it's middle of the range. If you want to be with measuring your risk with low-priced options, then the 100 will be perfect. That will be only about $80. Let's take a look at the spread. That will be almost 11 cents. You can survive. Open interest, 3,192 contracts. So that will make sense. And the contract high was $36. If I take these, I probably take 2 contracts. If you're more aggressive, you can go with 10 contracts. That will be close to 600, maybe $700. If you want to be conservative, take 1 contract, and middle of range, and probably two contracts, okay? But the idea is, my idea will be if I take 10 contracts, when I double or when I get to 200%, it will be 120 to 80, 80. That will be probably selling around 250, okay? So that will be my target. This is at least 8 weeks for me to look to double my money on XBI. And I will add these to the description of the video, just a little bit of a setup. Yeah, I'm not calling the trade, just a setup and how I potentially will do this. Remember, if Jerome Powell and his GAN just slow down in the wording. The other one that looks attractive, believe it or not, it's this one. You can potentially also take the 91. That's very attractive as well. So these are probably what I will do if I were to trade XBI. I do it a little bit different because I kind of understand where are the allocation of risk, so I have a better idea what to do. But in this case, I probably will take one contract, contract high $15. I will be looking as well on this one, at least potentially to go all the way back to $4. So that's XBI. Now, in a lot of these bounces, a lot of these reliefs that you will see, these rallies that you'll see, go ahead and make sure you plot on your screen, on your chart, the 200 exponential moving average. That will serve you as guidance as far as how you can go before you encounter a very strong resistance. You want to pay attention to that. And finally, the other sector, and it makes sense because it comes with it, will be XLV, the healthcare sector. Now, it came all the way bottom, all the way on the second week of June, and it's kind of going sideways. So far, I don't have any evidence. There's a little bit of over here. Take a look at this. Okay. As long as we are above 125, this is absolutely a buy opportunity. Now, I want to make sure it continues. We probably have like a base, somewhere like a triangle over here, something like this, could be like this. And the full continuation will be a breakout. That will take you, if you measure this area will be all the way to 650, takes you all the way to 138. But it's not really doing a new price. It's not a new pricing because it's not price discovery. I mean, it's not going to something that the sector itself doesn't know, because way before, sometime on April 22, actually April 21, the price was back on this area. So that wouldn't be surprised. Kind of looks like there's a little gap. Yeah, there's a little bit like a bearish gap over there. So that will just come back to fill the gap. So those are my two sectors. You want to pay attention. Everything that you plot, remember, go ahead on your chart, stock chart, bar chart, anything that you're using, 200 exponential moving average on the weekly chart, and make sure you use that as a measure where the potential asset, if everyone goes risk on, surprisingly, during summer, going into September, October, the market will continue that opportunity and you can actually make some handsome profits. Guys, thank you so much for watching. Make sure you destroy that like button. Make sure you come back. There's, you see that bell right there? Click on that as well so you know exactly when I come back with a new video, new ideas. The sectors I like. The sectors I don't like, I don't really call for avoid, because now the new threat in Wall Street is to tell you, oh, I recommend you avoid the sector. Actually, just tell me where there's potential to make money. Now, we don't know, and that's why I have all this technology following where there's this big allocation of money, and also where there's something that it's something particular, something very out of the blue, because there's no surprises. Remember, at the end of the day, yes, someone always knows. Okay, so if you want to know as well, make sure to come back to my channel. We'll keep talking more about this positioning and ideas that I see on daily basis. Thank you guys so much for watching, and I see you soon, okay? Ciao, ciao.